So Snapchat decided that today would be the best day to break the market. Its stock price is down over 40% after an SEC filing it did yesterday afternoon. We are seeing a lot of big tech names down as well. For example, Roku and Trade Desk are both down over 16% as I am recording this episode. In today's episode, I first want to take a closer look at what's happening in the market. And I hate to be that guy, right? I hate to be that guy. We keep hearing all these bearish news, but I want to share maybe some more positive thoughts about the markets and maybe the bright side of things, right? If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for my new tech channel where I pretty much just talk about tech news, so make sure to check that out. So let's get started.
I do want to thank the Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So Snapchat, yep, the company that has this little ghost as a logo. Maybe that was just a forewarning that it was gonna eventually haunt the stock market. Right, so Snapchat yesterday submitted an SEC filing, and they mentioned that since they issued guidance on April 21st of 2022, which was their most recent earnings, the macroeconomics environment has deteriorated further and faster than anticipated. They believe that it's likely that they will report revenue and adjusted EBITDA below the low end of their Q2 2022 guidance range. And pretty much the thing that broke the market today is this: the macroeconomics environments have deteriorated further and faster than anticipated, right? So investors, it's been a very kind of bearish market right now, and any kind of negative news just kind of gets overly, I want to say, hype, and continues to fuel that bear scenario. Pretty much how it was in about a year ago when everything was bullish, right? And any form of bullish news would just skyrocketed the stock market. Now the opposite is happening. And unfortunately, Snapchat is not the only one, right? We did see recently that Target reported earnings a few weeks ago, about a week ago, and they took a huge hit. And one of the things that they mentioned is throughout the quarter, they faced unexpectedly high costs driven by a number of factors, resulting in profitability that came in well below their expectations. I mean, we did see Facebook stock down about 8.5% today. We see Roku, like I mentioned, down about 16%. We even see Trade Desk down about 19%. So in kind of an environment where things start to go down, where companies start to lose some form of profits, usually one of the biggest places they try to reduce spending is the advertising market. So we can see a lot of the advertising companies are taking a huge hit today. Another thing, today The Verge came out with an article, and they had an internal memo from Snapchat, and Snapchat mentions the following. First, they are planning to slow down hiring. They plan to hire about 500 more people this year versus 2,000 new people it hired over the past 12 months. So it does seem like they're doing some form of freeze hiring. And this is not the first time. We've seen Meta mention that they are also going to slow down in hiring, and we see a lot of other tech companies doing the same thing. So all this continues to fuel that bear market mentality. The other thing the CEO mentions in this kind of memo to its employees that managers have been asked to review spending to find additional cost savings. And unfortunately, when you kind of hear that, it usually doesn't mean a guarantee, but usually means that there might be some kind of layoffs happening. And unfortunately, I wish the best to all employees right now. I definitely do not wish anybody to be unemployed at a moment like now. So I did mention at the beginning of this episode that I believe there's also some good news behind it. And maybe this good news might not work for everybody, especially if you're maybe someone who doesn't have that much time in the market yet available to them. But for someone like me who's just pretty much starting this investing, right? I'm turning 30 this year, right? So I have plenty of time for my portfolios to grow. I believe the prices we're seeing right now in a lot of great companies are sitting at very attractive levels. And I am really trying my hardest to increase my weekly investments by finding new ways to increase my income, because I do believe the prices we're getting now are going to be the reasons I'm gonna have some great returns in the future. At the same time, it sucks to hear that, right? That long term, I want that money now. I do believe in the short term we might continue to see more bearish stuff like this and more kind of bearish down price action. But I believe for long-term investors, this is definitely a great time, even though it doesn't seem like it. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.